Chess One on Monday, November 12th, 2018 for MarketChess.com. It is MarketChess.com. Save it. Bookmark it. Pass it along. S&P 500 index daily time frame shows us the selling pressure we've seen the last two sessions, especially today, knifing through the 200-day simple moving average, a yellow line in my chart like a hot knife through butter, really seemed to be substantially outweighing the promising rally we saw last week, especially on Wednesday after the midterm elections. It gave us, I would say, a glimmer of potential for further upside, but you couldn't blast all into the market long side. We talked about this for members in real time inside Market Chess subscription services. The concept of not being a blaster. You see that often in this day and age on social media. People always trying to make the big call on a daily basis. Of course, there's a time and a place to make a big call as a speculator, but the big call, making the big, bold declaration, that's reserved for special situations. If you're a serious speculator trading real money, you want to reserve those times where you have real deeply held convictions for special situations where many factors align in your favor. If you're just on a daily basis declaring bull, bear, all in long, all in short, you're setting yourself up, especially in a corrective market like we're experiencing here, for at a minimum, very choppy action in your accounts, maybe chopped to smithereens, if not much worse than that, unfortunately, in terms of your traders blowing up accounts. These types of markets, they'll do the trick. So the point is, there was a promising rally last week after the elections, and it's been eradicated, technically, in many respects. And that issue now is, do we stabilize? Do we flop around like a fish out of water? Or do we continue on lower? And when we look at some of these other indices and these index charts, the NASDAQ, the small caps losing 152 into the bell, momentum, renewed momentum is now lower, right? And so the issue is, the risk seems to be, it's not a guarantee, but the risk seems to be that we simply just cascade lower to retest or breach those October lows much more quickly than people think. You see the backdoor close to red in crude oil after a bounce early on in the session. You see the selling in things like high yield corporate paper, junk bonds, Goldman Sachs getting a lot of play. It's not a very pretty picture as the dollar surges and all of a sudden you get these renewed out of nowhere deflationary fears all of a sudden. The risks seem to be inflation. Well, boy, oh boy, when the dollar shoots the moon like this, risk certainly seems to be off. And oh, by the way, again, many of those tech names unwinding very harshly. So when the market gives us information like this, we want to respect it. Again, last week's rally may be a reason to probe along here or there. I was fortunate inside Market Chess Subscription Services to get out of two of my longs with wins, actually. I didn't have many on at all. But again, going into a defensive shell when the market really pounds it, I would say, into the infrastructure of our systems here, that, look, the correction is not yet over. That's a very important part, I would say, of being a speculator. We need to acknowledge that. Of course, there are special situations like natural gas. I took profits on one of my natural gas related long stocks today, only because, again, I don't want to overstay my welcome. Long equities when the market is this dangerous. Finally, I'll leave you with this. The VIX, I've said this before, I'm going to say it again. I still think the VIX is really not reflecting how much risk there is in the market. Goldman Sachs drilled, Apple drilled. Is the VIX really reflecting that? I know there's a bunch of interesting counterpoints to that. I'm not going to get into a whole debate about it, but for now, it just seems like there isn't extreme fear, maybe the kind of fear reflecting the wild price swings we're seeing and some of the risks we're seeing. So probably better to err on the defensive side. If you still like what you're hearing with my videos and seeing my blog posts, I'd encourage you to sign up for a membership to Market Chess Subscription Services tonight at a reasonable price. Great way to get you prepared trading-wise, get you situated before the holidays. Still plenty of trading to go before the holidays. We have a private Twitter feed, text, email alerts in real time, updated watch list, the full video starting with tonight's. Great group of people, great idea flow, great contributions. My promise to you, no noise, no ego, no nonsense ever, just a straight dope, good ideas, good discipline, like now in these type of markets through all markets as well. Thank you so much for watching. Happy Veterans Day. We're observing it today. Many entities are, but obviously happy long Veterans Day weekend. Thank you so much and have a great evening.